Great. Well, welcome everybody, and thank you all for joining us. I am Sasha Dichter. I'm the CEO and co-founder of 60 Decibels, and this webinar is a chance to highlight some of the top performing microfinance organizations that we have come across. So I'm really, really excited. This is really the highlight of my day and the highlight week of our work. What we really aim to do at 60 Decibels is help companies and investors really understand the social impact that they're creating for their customers. Um, the purpose really in founding our company is to allow the great performers that are joining us today to be seen, to have their work really shine, and to show what it means to really do right by customers, and really make a meaningful difference in their lives. And so we are going to be hearing from them. I'll just give a little bit of an introduction to what the 60 Decibels Microfinance Index is and what these awards are, and we will go from there. The 60 Decibels Microfinance Index, we have worked this year with more than 125 microfinance institutions across the entire world. We surveyed more than 36,000 customers, and this is the third year that we've been doing this index. The purpose of this index is to hear directly from customers about what outcomes they are experiencing. We really want to put customers and their experience at the center of how we understand social performance, and this is our chance to do that. And so not only did all of these institutions participate in this year's Microfinance Index, but each of them is a top performer across all of the metrics that we measure. So it really does distinguish them across all of their peers. And so the goal today is to really learn from them. What is it about their institution that allows them to have this kind of performance? What has their experience been with getting this data? And what can we really learn from them? So with that, I will introduce our panelists. We have Dr. Tayo from Grace and Mercy Hospital Improvement Initiative, who is one of the top performers in Sub-Saharan Africa. Mr. Dibyajyoti Pattanaik, who will tell me exactly how to pronounce his name. I apologize, from Annapurna. We have Susan Chibanga from Agora Microfinance, also a top performer in Sub-Saharan Africa, and Veronica Herrera from MiCrédito, one of our top performers in Latin America. So I'll allow them. I'm going to start with a question, and what we're going to do is I'll do a few questions for about the first 30 minutes. We'll have a conversation amongst us. In the meantime, two things we'll ask of the more than 200 people we have who have joined us. If you'd like to share in the chat, just so folks can get to know one another, where you're joining from and what kind of institution you're associated with. So you're with an MFI, you're with an investor, or you're with some sort of other organization, just to share that so we know who's here, and that will allow us to customize the conversation. And secondly, and probably more importantly, if there are questions you want answered, please also put those in the chat. We will try to get to as many of those as we can. If we can't get to all of them during this conversation, we will try to get to them afterwards. And also, this webinar is going to be recorded, so if you enjoyed it, if you have colleagues who have missed it, please feel free to share it with them. We will send that URL to you after the session. So with that, I will start with one question and ask the panelists to introduce themselves as they start to answer the question. We'll go from there. But the first question is really kind of the most broad question. How are you all doing this so well? I mean, microfinance has existed for decades, and you all have shown not only a commitment to having outsized impact for your customers, but success in really delivering that. And so really the first question is, what is your headline? What is it about your institution? Whether it's the institution, is it the product, is it the customer, is it the culture? Like, what really shines for you when you think about delivering this kind of impact? And so I'll start with Dr. Tayo, if that's okay. And then if we can go around, Dr. Tayo, if you wouldn't mind, just give me a quick introduction of yourself, and would love to hear your thoughts on this first question.
Okay, thank you very much. My name is Adesoji Tayo. I'm a board member of Grace and Mercy Households Improvement Initiative.
Oh no, Dr. Tayo's frozen for me.
Is basically to support.
Go ahead. You're back. Go ahead.
Okay. Our focus mainly is to support women, and just the way our name is pronounced, looking at household level poverty. And basically what we're trying to do is address poverty at the household level through the female, that's the mother of the house. And so we've been doing that for the past 13 years. And basically we are rural missionary. We have a rural missionary background. And so basically our focus is rural poverty. And that's why we have most of our branches, close to almost 350 in suburban and rural areas of Nigeria. Just as the name implies, our vision and mission also specify clearly what we do. We want to be a one-stop institution providing financial services to low-income earners in Nigeria, and our focus mainly women. And so maybe that's why right from the start, we've been looking at impact right from the start, because we want to be able to measure clearly how well are we impacting the women, and how well is what we do, how is it translating to reduction in household poverty. And so right from the start, our vision and mission is very clear, and we never had mission drifts. Our training is client-centric, and so issues like client protection principle is part of the training for all staff, including even our security men. We have staff code of conduct, which every staff will have to sign at inception. And basically what is there is, you cannot be rude to our clients. You just have to show empathy in working with our clients, because we're working at the bottom of the pyramid. And then we have an open channel of communication with our clients. We have client toll-free line, whereby they can call in to us without incurring any costs, and we call to them to find out how they are doing with our products. And then we try to respond to their requests promptly. I think those are majorly some of those things we do that has distinguished us in the market.
Wonderful. So what I'm hearing from you has to do, starts with mission, very intentional about where your branches are and really focusing those on the rural areas, and then a lot around training, listening to clients, client centricity. That's great. Veronica Herrera, maybe would love your thoughts on what you would add to
that. Sure. Well, I think our strategy is focused on our client. So first of all, we decide to create a mission very directly to see what our client improve their life with our service. That's one. Secondly, we create a product design from the point of view of our client in MiCrédito in Central America, because if we design from the desk, from the view of the CEO, it doesn't work. But when you create product from the point of view of our client, is directly to complete our mission. And third one, this number 3, is gender. We are a champion organization, create power in the women. For example, we have 70% of our employees are women. 60% of our clients are women. So we promote the empower of the women in Central America. So I will summarize in those 3 aspects. One is design the product. Second, the client on the center, change the life of the people, and women and gender power. That's the 3 aspects that I would like to mention in MiCrédito that we have been doing through these 20 years.
Wonderful. And if I could just ask a quick follow-up, is there anything specific, or maybe we could come back to this, but around product design that really stands out for you?
Yeah, for sure. For example, we create a water and sanitation loan. We have clean energy loans. We have education loan. That kind of service we create. In fact, MiCrédito is a unique organization. For example, we create an alliance with another organization, crop insurance, to protect our client for the environment, the changes, the climate changes that is experimenting in Latin America. We are, as a unique organization, that kind of service, that's an example. We have a lot of service focusing on our client, but I would like to emphasize in clean energy, water and sanitation, and crop insurance to protect our client from the climate changes that our Central America is experimenting.
Wonderful. Well, thank you. Well, Susan from Agora, what would you add to that?
Thank you so much, Sasha, and thank you, everyone. My name is Susan Chibanga from Agora Microfinance, Zambia. We are the largest rural microfinance in Zambia, serving over 150,000 clients. And with that, definitely, I think over the years, having been in operation since 2011, we have picked up a few things where we have remained quite consistent, and we know that that forms the bedrock of our operations and, of course, giving us the results that we see today. So number one, I think for me, is around our mission. With our mission, we say that we want to contribute to the economic well-being of our clients, for them to really be contributors to the GDP of the country. We also want to see in our vision that our clients would come out of poverty and become equal members of society. And therefore, having a double bottom approach of sustainability and impact, these have definitely driven every other decision that we have made over the years. So number one, we have a very deep reach. Our model is a doorstep model where we go to the client. Our tagline says breaking barriers to finance. And so we realize there are certain barriers where people are not able to access finance. And I'm sure, Sasha, you can attest from the results, over 80% of our clients actually say the first time I accessed the loan is when Agora came to me. So one of the barriers that we have recognized is the fact that the modern financial institutions are not where the clients are. And therefore, it will take them a long time, a lot of money for them to reach to the banks. And therefore, we said we're going to reach this barrier, but we're going to break this barrier and have a depth of reach that enables us to be where the client is. The second one, of course, is our product diversification. So since 2011, being licensed by the central bank, we have a credit-only license. But with this license, we've been able to diversify our products. So we do have credit. And with this credit, we've got business loans. We also have agriculture loans that are targeting the smallholder farmers and the small traders in the rural areas. But over the years, we have equally added a number of products, for example, leasing. So right now, we are actually leasing agriculture equipment to clients, and we are also leasing motorbikes. These products address their actual needs in the rural areas. So that also tells how much we do understand, our clients' livelihoods and how we can address the challenges that they do face. So in our product diversification, we have also had non-credit products, such as microinsurance, where the clients can actually have microinsurance for their loans, which is a credit life insurance. We also have weather index insurance that covers the farmers. Then we also have a standalone product, which is for funeral and hospital cover. These products are informed by the needs that we see with the clients. You see, when you're targeting a smallholder farmer, you know that even their profits are very small margins. And therefore, you can imagine that when this client is unwell and they cannot be at their grocery store, even just for 2 days, it means that they have lost out on income. And so as Agora Microfinance, we said, why don't we offer them a hospital cover where if at all they are not at their grocery store for 2 days, they are hospitalized, we give them a cashback that is going to jumpstart them when they get back to their grocery store. And therefore, I feel that when we are designing these products, having the client in mind is one thing that has definitely set us apart from the rest. The other one, of course, is strengthened partnerships, partnering with different organizations. We don't do leases by ourselves. We partner with equipment suppliers. We don't do the insurance ourselves. We have partnered with insurance companies who are the underwriters. We have partnered with a number of companies or lenders that have actually supported us from overseas, usually the development funders, those that have supported us. We have also partnered locally, even with the government. We understand that we can't do this work by ourselves. We need partnerships, very strong partnerships that will enable us to actually provide these services to the clients. The fourth one, and for me, I think is the most important, I really can't forget this one, is the core team. The team that has got the passion to drive everything that we see, to ensure that the decisions that are made in the boardroom are actually actualized on the ground. The passion that our people have cannot be matched, I think. Yeah, so those four, I think for me, are the things that I can say have made us really have this impact.
Wonderful. Thank you, Susan. And
Thank
sounds
you.
like that can't be overestimated. Dibyajyoti, what else would you share from your perspective?
Um, Thank you, Sasha, for this opportunity, and thank you, 60 Decibel, for recognizing us as one of the most impact-making organizations across the country in India. So we at Annapurna Finance are a purely rural microfinance organization. So our story is not very different from what Veronica and Susan have just explained to you in terms of our value and from where we come. We came from a development organization, so our DNA was always very focused towards developing the client that we serve, the people of the rural India, those who are deprived of opportunities and access to those resources to get them strengthened in terms of providing financial and non-financial services. We at Annapurna Finance today serves close to 3 million households across the country. We manages close to 1,200 million USD asset under our management. We are, even though we are fairly a sizable organization today, our core values and our vision is still very much in place, and that were again, the belief that this microfinance as a tool, as an enabler to help people come out of poverty, have greater access to resources, have greater decision-making ability. We serve close to 99% of our clients are women. And it's very, very focused approach we wanted to, and that's why the name Annapurna, which is the goddess of wealth in India. So we wanted to, we believe that the woman in the village or the household of the, she's the goddess for the wealth. So she would have, this additional creation of wealth for their well-being, and whether and their expenditures around their access to finance, help them in have greater access to better healthcare, better education, or their freedom and choices to mobility. Those are very critical elements for us when we started, and also kept in mind that there is a climate change happening. There is a shift in income is also happening. So the changes in the behavioral pattern for our client are also happening. There is also a generational shift happening. The people that we used to serve when we started as our clients to the people that we are now serving, they're more educated, more informed, and also the country is going through a whole transformation in terms of the infrastructure, the public infrastructure, like connectivity in internet, electricity, roads, bank accounts, penetrations. We are also taking the help of those infrastructure development and keep changing and keep innovating our product lines to serve our clients better. Today we have a product called Just in Time, which is an emergency loan available to our clientele 24/7. It's a completely digital loan in 2 minutes time. You just send an SMS and you get the money credited to your bank account. From there to the continuous research and data-driven decision making in terms of underwriting, in terms of reaching out to the clientele, because as you know that India is also highly penetrated as a market. in urban and semi-urban areas. So identifying villages, areas where the penetrations are less, the opportunities are less for them in terms of availability of this similar kind of an institution. So these data-driven decisions are also helping us to reach out to those corners of the tribal and the rural areas, and also to give more personalized, more hyper-personalized product designs. We understand that these people are, and knowing India, how large it is, you can understand that the complexity of a challenge or a problem for a woman in East India is very different from West India. Whether the access to water, access to sanitation, access to education, or your mobility, these are very, very different. And with it layered with the climate change and its impact, it's also creating even additional challenges for us, and to be careful while continuously, evolving with our product. Just to give you an example, last year when we have got this temperature hike in the summer by almost 2%, 2 degree, the entire dairy farming community faced almost a 4 liter drop in the milk production. And that's a significant, drop in terms of a small dairy farm with 2 cows. So those are the critical data points which helps us, because we monitor, we track each and every individual production and how they are doing it. That helps us to come out with newer and more impactful products, whether it is bundled with insurance, whether it's bundled with product that can help them manage those cash flows during this deep period. So those are all, still the focus remain to reach out to the largely unreached people, and serve them, so that we can at least cover. I think from our point of view, I think at Annapurna we cover almost 12 sustainable development goals that are there in the UN charter. I think that's where we are coming from, from whether it is access to water, food security, sanitation, income opportunity, education, because we also, because it's as we are like all other microfinance institutions that you just talked to you here as panelists, my co-panelists, we are also serving at the doorstep. So being a large organization, every day 12,000 field officers reaches to 5,000 villages in India. And so we have the ability to, talk to them, get them learn new skills, whether digital, and transactions, whether it is to, how to access the market, or informations regarding, whatever the product they're involved in, additional education. So financial literacy, digital financial literacy, and then social, challenges that they are facing, and how do they can solve. This is banking, investment, insurance. So it's a very large program that we continue to do. Our focus still remain very, very towards the the client that we serve, a very client-centric focus, and also a continuous evolution of this product line. When we started, there was a very different organization and product line. When today we are talking to you, it's a very different product line, but it's very impact making, and we're in a position to track each and every product and how that is creating a difference in our client's life positively.
Yeah. Well, I mean, there's so much more for us to dig into here, but I've just the consistency of the client centricity, what that means for product development. And I think one of my takeaways is going to be what it means to be at someone's doorstep, especially at the scale that all of you are operating. I will go to the next question. I just did want to make sure I suspect a lot of the people who have joined us are familiar with what the index is actually measuring, but just to make sure that everybody has that background. So what we're doing with each institution is speaking to a representative sample of clients, typically around 275. And we have a survey that looks at access, business impact, household impact, client protection, resilience, and agency. So across each of these 6 areas, there's 3 to 5 questions and 3 to 5 indicators that really allow us to understand things like As Susan mentioned, have you had access to a product or service like this before? What is the impact on your business? Very specifically, what's happening in your household around well-being, around access to meals, around the lived experience of each person in the household. Client protection has been increasingly important in our index to really make sure that any negative impacts are minimized. What's the resilience that's happening, financial resilience in particular, ability to respond to shocks. I think we've heard from all the panelists about climate and its impact and the shocks that that's creating, or illness or others. And agency, which really focuses on gender dynamics, confidence, etc. So I did just want to make sure that everyone here knew what these awardees are being awarded for, that at the client level, they are excelling across all of these dimensions. I would love to stick with kind of product and client because that's kind of where my head goes, but we have lots of investors on this call. And getting to the rural areas, the operational challenges of that, I'm sure the costs of that, etc. It's not easy. And so I'd be curious for any of the panelists to just jump in. What does it take from an investor perspective, or sort of what's your message to investors? How can they show up to support this kind of impact? And what does it mean concretely for whether it's their product or their expectations or really whatever you would say, this is what I see when an investor really feels like they're accompanying me on this journey to impact. And conversely, this is what happens when an investor doesn't really understand what it takes for us to do what we do. So I really open that to anybody if you'd like to start.
Okay, thank you. Maybe I should tell the cat.
Please.
For us, there are three bottom lines we're looking at. And these three bottom lines has to do with people, planet, profit. And so how do we marry the three bottom lines in such a way that the organization will be sustainable, especially when we're looking at the finance costs? For us, if the finance cost is a major barrier, and if the finance cost can be reduced, then it is easier for you to reach out to the clients. Secondly, we equally look at how do we help in a situation whereby we have very stringent conditions for the loans or for the support we get from the funders, in such a way that those conditions are not looking at macroeconomic issues beyond even the organization, beyond the microfinance institution or bank. And so some little level of flexibility is also required, especially when you find the institution in a situation that is not expected. For example, in Nigeria, that was about a year ago, suddenly there was a law from government and it changed the trajectory of the finance system. Under that situation, power went up beyond what is expected. And so that flexibility is also required, for the institution to continue to be able to serve, the clients, because the moment that thing happens, the clients won't have anything because they are at the bottom of the pyramid and they are the most affected by little changes in the economy. So a little bit of, and then of course, learning. Learning is a continuum. Learning is needed. And so technical support is also important, so that when funds are given, technical support to be able to make the institutions to perform effectively, it's also required. These are some of those I could think of now.
Wonderful. So I suspect the investors are not surprised to hear lower cost capital, more flexibility. What else would any of the panelists add, or is that a good summary?
I think it's the understanding of the sector and the vulnerability and the challenges, multiple challenges that an institutions face while operating in this challenging environment, which is you're squeezed from everywhere, and still trying to serve a community which hardly anybody cares about. But because of our DNA, because of the vision that we set for ourselves, we continue to march. And it's also very important that you choose your investors carefully, who are aligned to your vision, who have a vision which is aligned to your vision. and have the expectations set with a reality, not a very exuberant expectations from you on various matters. Because as I said, you could see that there is a huge change happening in Indian financial services systems, in the digital penetration, in having the infrastructure in place, but there are still a large section of people who are deprived of even the basic facilities. And to reach out to them, help them understand the basics to start something, and then start building from there. It takes a lot of commitment. The people who come to this sector, they're already committed to that, and the people who would come and support them eventually have to have some amount of commitment to do that. And that's why it is also very critical for investors to understand that it's not any vanilla financial services like in the banking system. It's a very different ball game altogether. It needs a lot of hard work, commitment, and a long-term vision. It's not a short-term goal that you can achieve anything from that point of view, because you are fighting against a perennial poverty cycle with a lot of your customers. And they have the vulnerability to go back again to the poverty cycle if there is a small change in whether in the market condition or environmental condition or even regulatory conditions in that market. And that understanding, that visioning, and that alignment is very important for your investors to have.
Well, I mean, such an interesting point. I'm curious if other panelists have something to add, but that level of distinguishing between institutions is not always easy. And obviously, one of the main purposes of our index is to make it easier for investors to do exactly that. But I'm wondering, because what you've just described, I often hear investors sort of describe microfinance as opposed to other sectors. It's like, this has been around for a long time. It's quite standard. We really understand this. It's just a debt instrument. It's, and that really doesn't sound like what either of you have described. So I guess I'm just wondering for, Susan or Veronica, like, how does that distinguishing happen? And what's that learning process that you want to see these investors go through to understand we're doing something different here? We're working with the most vulnerable populations, the most rural populations. We have all of this product, Susan and Veronica talked about product innovation, partnership. I mean, everything you described feels so different from what is sort of the caricature I just gave of investing in microfinance. So how does that distinguishing happen? I hope our award and our index is part of the answer, but kind of more broadly, what's that conversation you need to have with investors to help them understand what you're doing and why it's different, and to understand if they have an appetite to go on that journey with you?
Yeah, thank you so much, Sasha. Indeed, on paper, it's the same. And what I can say is that the results of the 60 decibels have just amplified the fact that this is different work that we are doing. Like the other speakers have mentioned, we really need a lot of alignment. I've had a lot of investors that have come in, and when they are conducting a due diligence, their officers will be like, oh, wow, this is totally different from what we understood. But the past few years, like last year and this year and the other year, I actually had some board members and senior advisors from some of our impact investors come in Zambia and come and see our work. And guess what they said? Oh, wow, we didn't know this is what it looks like on the ground. So everybody, when you actually come on ground, then you're able to align your expectations with exactly the theory that you have been looking at. For me, microfinance is very, very different. Right now, when everybody is talking about digital financial services, it's very possible for you to have a bank go digital in a short space of time. With microfinance, talking about the last mile, especially for a country like Zambia, you will find that we still have clients who don't even have a phone, not even a small feature phone, and you want to drive digital financial services. It's not possible. So there's all these intricacies that you definitely need to understand and appreciate around the microfinance operations. and financial inclusion is key. You need to understand how are these clients actually excluded and how can they come on board, I can just also explain, I remember, I think the previous speaker was talking about alignment and understanding some of the impact that would come through on the business due to maybe regulatory change. Last year, Zambia experienced a severe drought. It was a national disaster. We are exposed to these smallholder farmers. You can imagine what our portfolio at risk is. But because we have the right investors, none of them has actually pulled out because they have come to understand and appreciate. So it's very good also for the investors to really be aligned with their priorities and their expectations as well.
Yeah, wonderful. Veronica, anything you would add there?
Yeah, sure. Thank you, Sasha. Well, I think if I back to the microfinance 30 years ago, the microfinance was like micro small loan, and that's it. That's it. Now we have technology in the middle. We have rural area. We have climate changes and crises in different countries that we have to manage and be part of the life of the people. I would say if I compare the microfinance 30 years ago with the current microfinance, of course, we have MFI regulators, we have more sophisticated because the technology, but in addition to that, the clients is demanding other kind of service. What does mean other kind of service? It's not just micro small loan, it's education, it's housing, it's remittances, and it's insurance, crop insurance, life insurance, and different kind of insurance. So we are growing in the microfinance because the client is growing. It's not the same. Somebody can say, oh, microfinance is almost the same. Microfinance is repeating the products around the world. But we demonstrate that we are focusing our clients. And in the past 30 years, we move around how can we service through the technology. If I compare 30 years ago, we don't have cell phone. And now we have cell phone. We create new application to service to make the finance inclusion. So I would say we have to be more sophisticated. We have to be invest in technology, invest in the field areas, move as a world is moving around. So in my opinion, we are making now, if I compare also the lenders in the past was focused just how profitable is the organization. Now they are starting to change it and say, no, I want to see the true social impact, the true change the life of the people, the true improve the life of the people. In the case of MiCrédito, we have some metrics inside that we can follow if our client is improved with a different service. So we are improving and moving according with the current new world, as I mentioned before, technologies and those things, but also we have to protect the clients. If I compare the microfinance many years ago, the way to collect, it was not very ethical. And now we are focused to protect our client. Now we are talking about how can we protect our client? How can we collect with ethic practice to respect the client, to be sure that the client is receiving the products that they need, not that the organization need to grow. No, it's what the clients needed is now the new microfinance. So I see evolution through the years in microfinance. And I am proud to say we are focused on the client and we can measure how our client changes their life. And I'm glad that the new lenders are focused on that. It's like share the mission in our organizations.
Wonderful. Well, last question for me, and then we'll go for the audience. And we're already short on time. And on all of these, I want to ask each of you 5 more questions. But Susan, you alluded to it, and Veronica, you did as well. But I'm curious on this distinguishing point for either of you or for any of the panelists. The act of receiving this award and this recognition for your outsized social performance, what impact has that had in terms of either communication with investors, your team, your sense of mission? Like, what happens when you get this sort of acknowledgement that it's, not only based on your own data, but comparative data, you really are at the top? I'd just love to hear some of those stories.
Can I
Please.
start? Well, I think it was an exciting moment when we received. I would say it was 3 moments, different moments, and I would like to share the impact, but I would like to share the emotion that when we received the award. We say, oh my gosh, we received an award, but we can't share, because at the beginning we received an email and we can share. It was like, oh boy, But we went to Atlanta to have a shareholder meeting, and we were in that time. And our board directors in Atlanta was really excited. And the team in Nicaragua and Honduras was really exciting. So I think that's the first moment. The second moment that I want to share was when I moved from Atlanta to Costa Rica to participate in the photo. I feel it's a teamwork, but I had to recognize that I feel like a rock star, because every single lender was, Vero, congratulations, you received 60 Decibel award, congratulations. It was that moment, but in result, what happened? I received an email from some lenders that they are waiting for due diligence and saying, congratulations, we have a new operation for MiCrédito. We want to start the due diligence. So we see the result immediately. In the long term, I would say we have to learn. We have to learn there is something that we have to improve in our organization, and we are ready to implement new ideas. For example, before of that, we believe that we service all the rural area, but in the result, we detecting that there is some gap that we have to improve. So I'm really excited. I'm really proud, but we have to work. It's a committee for our team, for our board directors to continue growing and see the impact that we have been doing. It's really amazing. Thank you, Sasha.
Wonderful. Well, I feel very selfish asking these questions then, but it really, that's the hope. I'll just leave it to one more person on that question, and then we have 10 from the audience, which we're never going to get through, but we'll try to get through some of them. But anything else on the awards? And then
if you look at my hand, you will see we're lucky. We're lucky to be twice. First 3 twice in Africa.
Yes.
And so that gave us an opportunity to compare our result of last year with the result of this year at the board level. And a lot of questions were asked, we were able to answer through the results of the 60 decibel, impact study. Now, for last year, it has helped us. It is also good for you to know what you've done, so that you know what you've helped us to do. That will encourage you as it's encouraging us also. You notice that in one of the studies, our client said now they have a voice. It has given them an opportunity to make decisions on their own, based on our intervention. And so we felt that has given us an opportunity to even use the same platform that we're using to work with them to do some non-social activities. And so we partnered with another partner, and then we introduced a training called Pathway to Life Being. Pathway to Life Being is teaching them about resilience, about hope, about determination, about the fact that they can succeed, because, we're working at the bottom of the pyramid. And so if not for the result we got from 60 decibel, we wouldn't have been thinking along that line. Secondly, we introduced education loan, because in one of your study or findings, they said they've increased their expenditure on education of their kids. So now we have education loan. We want to measure whether there's mission drifts at the board level. If you look at the first and the second impact, it's talking about first access. The second one is talking about alternative. And then we could say that if what we score is the real score, then we are still maintaining our vision, and then we can continue our rural penetration. Obviously, it shows that we are still relevant to the people at the bottom of the pyramid. Then, issue of savings came up too from the study. Now we've reinforced channels for saving for our members. So these are some of the things that the study has done for us. Of course, it has placed us in the face of the world even more than we were before. So you've given us another platform for people to know what we do in Nigeria, far away in Ibadan, Oyo State, which is not the capital of Nigeria anyway. And so quite a lot of things you've done for us at the board level. Now we are confident that our staff are doing what we've been putting a lot of efforts and enormous resources in training them for the clients to give us this kind of report and for us to be in top 3 2 times, consecutively.
That is true. And that's an exceptional achievement. Wonderful. Well, now I'm going to try the impossible and to summarize 10 questions for this group. There's a handful of questions about product in particular, and I'll give the sort of the headline question, although these are from multiple people, is how do you manage the trade-offs between portfolio risk and outreach, which I think is a good framing question. So how do you get to the clients you want to get to, but manage risk? And then there are very specific questions as follow-ups. One person who is financing working motorcycles for gig workers, but they've seen credit deterioration. So you have any good advice or practices? And then another question, which is another focus area, but might be related. Rural entrepreneurs need to finance larger pieces of equipment, crop processing, spinners, looms, but the loan amounts are small. So these are really questions about, product, loan size, outreach, et cetera, quite operationally focused. So maybe, Susan, we haven't heard from you in a minute. I'm wondering if you have any thoughts across any of those questions.
Sure. Thank you so much. How do we manage to make sure that we have the outreach and at the same time that we do have the quality and I guess the profitability as well? I think for Agora Microfinance, one of our strengths has been in the cash flow analysis. How you analyze the client's business, because we have told ourselves we are not providing consumer loans, we're actually providing business loans. And therefore, our focus is the business to make sure that we are funding the business and that the clients are able to inject those funds into their businesses. Over time, you see that the clients, their businesses have actually grown. We do have one of our clients who I think the first time that we started in 2011 was getting about $20. But now she is actually an SME client. So she moved from a group client into SME, and now she is getting close to $2,000 of a loan. And over time, she has built her business through the loans that she has been getting with Agora Microfinance Zambia. She's not the only one. There are so many of such clients. And therefore, our focus really is on how we conduct. So even for a repeat loan, we will be conducting the cash flows. We want to see how the clients have actually used their funds. Secondly, I think it's the constant touch that we do have with the clients and making sure that we are providing that level of literacy and knowledge on how or what these loans are actually meant for. So before we can actually disperse these loans, we take some time to have some form of financial education with the clients, training them about our products, about the fact that you really need to pay back to us, and therefore you have to invest this amount into a business that is going to generate income for yourselves. So we do emphasize on that aspect. And I think with those things, we have seen over the years, on average, our portfolio at risk is under 3%. all these years. Of course, with the exception of last year, with the hit on the agriculture loans, where there was no good harvest. But over the years, our numbers are actually on our website. It's below 3%. So I think those are some of the things that have actually helped us. Generally, people do consider that the rural clientele are very risky. I would say for the rural clientele, it's the cost actually that is an inhibitor, because it's very costly to go and provide these loans to them. The operating costs are quite high. But if you are transparent, if you make sure that at least you can adhere to the client protection principles, make sure that they're not overly indebted, really, these people would not be as risky as we perceive them to be.
Yeah, wonderful. We're short on time, so if anybody has like a 60-second addition to Susan's wonderful answer, we'll take that, and then we'll go to a next question. Anything else on kind of credit worthiness, cost, and/or that we didn't address directly? How do you get the loan size to be appropriate? I know, Susan, you sort of talked about graduation, but any other thoughts on these topics that someone would like to share quickly? Maybe from Veronica or Dibyajyoti?
Yeah, sure. I think the technology help us. For example, in the case of MiCrédito, I think 10 years ago, we have for example, expenses ratios was around 50, close to 50%. And then we reduced until 28%. And now we have almost 12%. It was through the technology. How can we get clients from the rural area? We have a cell phone, we introduce all the technology, but also I think the most important is to alliance our loan officer with our mission. If the loan officer is clear how they are going to go outside, what is their own work every single day, it's easy to improve the life of the people with a lower cost and very high quality of the portfolio. That's my opinion.
Great. I'll move next. We have Shafi, who's the CEO of Ugafodi Microfinance, who had a question around collections and client protection. And so the question was, sometimes when staff are late on their payments, there are external debt collectors who are not his staff, who then start interacting in a negative way with clients. And so there's a question for any of the panelists. Have you experienced this? And if so, how do you handle the fact that people who are not the loan officers of the MFIs start coming after the clients? And how do you make sure that that protection is in place?
Well, for India, that protection is available from the regulator itself. You cannot have somebody else apart from your payroll employee, go and visit the client for collection. So
and
that's
in practice, like if
completely
somebody
no-go
does
in
go
India.
visit, what happens?
No, they can't. Like you can't send somebody. That's illegal. They can just stop you from doing business if they get a complaint. There's a very strong client grievance mechanism available, both at the institution, association, and the Bank of India's level, and they continuously spread this news through advertisements. Their mobile numbers of the local officials of the central bank is available to people to go and complain, and the grievance cell is extremely careful of the client protection. That's the paramount interest to the regulator, and the institutions are equally.
Wonderful. Any other comments on this? Have others experienced this if the laws aren't in place?
I think in our case, I would like to share the experience that we prevent instead of make resolution in the middle of the very complex situation. We training our loan officer, and we say our social value is protect our client. Every single training, we say mission, vision, and values. And value is respect our clients. So we prevent that kind of situation. But there are some cases, new people coming from any other industry, and could be happen. So we have a mechanism. Is that happen? We have a mechanism that is including digital to make their their how can I forgot it in English, their application for any harassment of the client of the loan officer, right? So we have a mechanism to make resolution for any compliance with the client, for any fight for the clients. And we have in every single branches, we have a person in charge of this. So we have two levels. One is prevent, and also we have a mechanism to make any stop this situation in the case that it happened. And if this don't make solution here, move into the next level. Is then the head office, there are a person in charge of this to stop this. But in my experience, it's better to prevent instead of solving problems.
Yeah.
For us, we even have toll-free line that every of our clients have the toll-free line. So if anything happens at the field level that they're not comfortable with, they can call our client services desk, which is on for 24 hours. And so a lot of anything that happens at the field level that they're not comfortable with, they pick their phone, they call. And they're not bearing any cost for the call. We are bearing the costs for the call. Secondly, we added to what Veronica said, we train our clients, not just our staff alone. Before our client takes a loan from us, we train our clients. They have minimum of 2 weeks training for them to be able to understand the intricacies of the loan. So nobody comes to them to tell them anything about the loan that they do not understand. If you say something that they do not understand, then they get back to the organization. And there are other means through which they can, raise questions, either through the branch, or through the area manager, and then they can escalate to the head office.
Wonderful. Well, I will mention, not in our index, but in other work we've done with microfinance institutions, we've done a lot of measurement around this exact point, and are customers actually aware that they can make a complaint? Do they make complaints? Do those complaints get resolved? And obviously that's hugely important. Well, truly, for each one of these questions, I know that we are just scratching the surface, and there's such a wealth of knowledge around this virtual table. So I would just have taken away, it is striking to me how consistent the message is around culture, how consistent the message is around client centricity. And what I, just as a person who's also running a large distributed organization, the transmission of that culture to each and every person, whether it is staff, whether it is clients every day. I really tip my hats to each of you, because I know how hard that is and what kind of real consistency and kind of tireless focus that requires. So it's really an honor to get to listen to all of you. I do wish we had all day, because again, I'm sure there's much more to learn. For the folks who asked questions that weren't answered, of which there are many, our apologies. We'll do our best to answer them virtually. As you'll see in the chat, the report is available online that has all of these results. There's a session focused particularly on Latin America, which will be conducted in Espanol, in Spanish, which will be in early December. And there's also in the chat the previous session, which was wonderful as well, as a YouTube recording. So thank you all again for your time. From all around the world. We learned so much from all of you, and if we can play a small part in getting some visibility for the great work that you all are doing, then we're really proud to do that. So thank you again, and thank you all for joining us and staying at a great group, more than 100 people still with us, and that's a great sign. Take care, everyone. Have a wonderful day.
Thank you very much. Thank you very much, everybody.
Thank you so much, Sasha. Thank you, everyone.
Thank you.
Bye.
Thank you.
Bye.
Take care.